In this video, I'll be showing you or explaining how you can take or trade divergence efficiently and correctly, okay, and the tips to know or consider before taking divergence, okay. So before we start the video, if you have any inquiries or question or you want to know some details, the links are in the description, okay. So let's begin. First of all, I hope you should know the basics of divergence, okay. So if you don't know the basics of divergence, I've explained it before, like what divergence is, so you can check my previous video. So let me just do a recap of what I said in the last video. So divergence is just simply when the price, okay, and indicator are moving in opposite direction or did not consider is okay together. Okay, so let's say the price is moving like this and the indicator is moving like this, okay. So as you can see, they are different in opposite direction. Whereas, so if you want to measure divergence, okay, you need to measure the highs and lows, okay. So I see people taking divergence from maybe either here or here. No, you have to take from highs and lows, okay, of your chart, okay. So very well, I hope you should know that there are different indicators you can use to take or trade divergence, okay, but they are the efficient ones and or the common ones among them, okay. So I'll be explaining that in the video, in this video too. So as you can see, the price and indicator, they're moving in opposite direction, where if you want to measure this price, you can see measure the highs, and also if you want to measure the indicator, we'll measure the highs. As you can see, this indicator, okay, let me raise this. So let me raise this upside. So you can see that the price is moving upward when you measure the highs, and when you measure the low of this indicator is moving downward, okay. So just trying to tell you that, okay, this is actually trying to form divergence, okay. So let's take another example, okay. And we have different type of divergence. I've said that in my previous video. I said we have the bullish and bearish. Bullish is when it's moving up, while bearish is when it's moving down. And in your chart, bullish is green, bearish is red, okay. It matters on how you set your chart, okay. So and we have the hidden divergence, okay. There are different which I've explained in the video. I don't want to make this video long, so if you don't know the types of divergence, you can switch back to my previous video so you can watch it and understand it, okay. So there are different indicators we use to take divergence, okay. We have the RSI, we have the MACD, we have the stochastic. They are just mainly different, okay, way indicators to trade divergence, and I'll be just be mentioning two in this video. I'm not saying this two is the best, but this is what I use, okay. So currently we are on USD CHF, okay, and me looking at this chart, we should notice that we can actually use some divergence here. First of all, we can spot a support around this side, okay. We can spot a support around this side. So in confirming our support, we thereby use divergence, okay, and I'll be showing you how, okay, we use divergence. So let's go add our indicator, okay. So this is the default settings of RSI 14, okay, but I use RSI 7. So whichever one you want, 14 or 7, okay, they perform the same use, but I use RSI 7, okay. So in RSI 7, we can actually find a divergence. Okay, so we found a support here, and to confirm support, let's say we're here in this chart. Okay, we are around here in this chart and we find support and we say, okay, can is this support valid, yes or no? So this trade is somehow risky. Okay, so you just want to catch 2 to 3 candles and get off the market. Okay, and I will explain why. Okay, and don't forget 2 to 3 candles, this is 1 hour chart, so 2 to 3 candle will be like maybe 2 to 3 hours. Okay, this one candle, 1 hour, so just take trade like maybe 2 hours, 3 hours, highest 4 candles, that's 4 hours, then get off chart. Because if you switch to 4 hour chart, an head and shoulder pattern is forming, which is indicating that it will be selling. Okay, so that's why sometimes it's actually good to switch to higher time frame so you can see the bigger picture of what price is actually tending to perform, okay, in the future. Okay, so you just want to catch the little move in the market. So this support and resistance here, don't forget about it. So price and indicator, they're actually moving different direction. So it is this. Okay, so me looking at this, you should actually know that, okay, I can actually just enter for a buy. Yes, 2 to 3 candles, then you'll be out of the market. And don't just enter straight. Okay, just wait for maybe a bullish momentum to be formed in the market before entering trade, because it's actually possible for it to break this support. Okay, so that's why it's good to look for a bullish momentum. So you can, as you can see, this blue candle formed. I say, okay, this huge bullish candle formed. Can now, okay, it's actually possible for markets to go high, okay, before continuing the range. Okay, because it's actually in range. And even 4 hour chart, I check 4 hour chart, it was in head and shoulder pattern. So that's why we just enter here, catch 2 to 3 candles, then we exit. Okay, so this is 1 hour time frame, so you can actually take 2 to 3 hours charts. No matter the lot size, you close in profit. Okay, don't take or enter divergence without any confirmation. Use divergence to confirm your trade. Okay, because you just don't just pick in the market and say, okay. Also, let's add our stochastic, sorry, I meant MACD. So I said I'll be adding. Okay, so in MACD, you can see that it's also the same thing. Okay, price and market moving in opposite direction. Okay, so people ask me, is it advisable to use two of them in a chart? No and yes. If you are suitable with it, okay, you can um add two of them, but I advise take one and stick to one and be conversant, okay, with one of them. Okay, so sometimes RSI can be true and sometimes MACD can be false, and also sometimes MACD can be true and RSI might be false. Okay, you just need to like know how market is forming. Okay, so nothing is 100% in forex market, nothing works 100%, but to minimize your loss, that's why we use all this RSI, MACD, divergence, price action, okay, to at least give you a backup that okay, it's likely for market to go in your way. Okay, I hope you understand what I'm trying to illustrate here. So let's check another market. Okay, so this is AUD JPY. Okay, another way you can use to, or you can take divergence, is using it in trend or range market, okay, or consolidating market. This is what I mean. If you see market consolidating, okay, you see market consolidating, okay, you can try to know, okay, if your entry will be suitable or not. Okay, so let's say you connect these lows and you see your indicator moving opposite direction, it means that okay, you have a backup plan. So two are confirming your entry, both trending using trend line and also divergence. Okay, so it's good to have 2 to 3 confirmation of your entry so that your trade will be valid or to move to profit. Okay, you can't just use one price action technique and just use one and say that okay, you can beat your chest to say that this market is valid. Sometimes it can go in your way, sometimes it might not go in your way, but what is sure is that try to use 2 to 3, highest 3, okay, but at least use 2 confirmation, either trade line with support and resistance, or any tool you want to use, Fibonacci with support and resistance, Fibonacci with trend line, okay, highs and lows. Just use any one, but make sure you have about 2 confirmation confirming your trade. You can also use moving average. Okay, I see people using moving average, 50 moving average to confirm their trade. Anyhow you use it, just know that you must have at least 2 indicators, not really indicators, but 2 price action strategy to back up your entry or trade. Okay, so as you can see here, if we connect our trend line, you can see that market is actually in a range right now in this market. Okay, where our market came down, then consolidated. Okay, let's say you spot this range now. To confirm your trade, you can now use divergence. Okay, as you can see, they are moving in opposite direction. Okay, so don't forget you have different types of divergence. So anyone you see, just make sure you understand it, then um trade it wisely. And if you don't know the types of divergence, you can head on to my previous video. I've explained the types of divergence and the way they are formed. Okay, so I'm assured that if you've watched that video, then this video will be an ease for you. Okay, so I hope you understand this. Price is moving in opposite, price indicator moving opposite direction. So let's say you found this range or consolidation in the market and you want to try to confirm your trade. Let's say you want to enter here. I say okay, connect the 3 points. Now connect the first 3, they are moving opposite, price is moving like this, indicator is moving like this. You should confirm that okay, I have a backup telling me that okay, this is actually right. Okay, people, then you can now take your trade. It came back again to retest it again, and for the fourth time is actually following the divergence plan. So this is actually a good trade to enter, and this is a good way to confirm your entry. Okay, I hope you understand this. So let's head on to another asset. I want to give different examples so you can actually understand what I'm saying here. So this is EUR CHF right now, and first of all, we can see that we've identified a little range in the market. Okay, this is actually um a range in the market. You can see prices ranging. Anytime you okay, this is another tip. Anytime you see market consolidating, try to put your trend line to follow them, so at least, even though you don't want to catch, so that you not be missing the move in the market. And if you see the consolidation is getting too much, you can get off from the market. So price is actually signifying that it will be breaking out soon. Okay, so we can see that price is moving upward, and in RSI here you might not really understand what market is trying to say. So, and also in MACD too, but there's a type of divergence whereby, okay, so I won't get people confused. Okay, markets upward in the when we connected the lows of the market, now we are connecting the lows of the RSI indicator, so you can see that it's moving opposite direction. And for the MACD, this is the highs. Okay, there's a type of divergence where we connect the highs and lows. Okay, highs, when we connect the highs of the price and lows of the indicator. I don't want to talk about that so that you guys will not be confused. Okay, so if you want to know about that, you can check the previous video. I've explained that type of divergence too. Okay, we have the hidden divergence, we have the regular divergence. Okay, so there are different type of divergence, so I advise you guys to go learn about that. Okay, so you can be familiarized with this video, you can understand what I'm actually saying. So this is another type of divergence formed, okay, to confirm our entry, our trade. So if you are to enter here, you can see divergence formed on this line. So you can actually enter, you buy, put your TP on this trend line. So as it came here, you can also um TP close in profit. Okay, so and the C price came back down. Okay, and you can see it's also retested, it broke out. So if it's that we bought here, because it's actually saying the same thing, okay, same divergence, but it's broke here. It's not that it's not valid, okay, it's just that it has consolidated, okay, a long time. So that's why sometimes it's advisable to wait for candlestick formation, either engulfing, hangman, any of the candlestick pattern to confirm your trade. Okay, so if we exited this trend line, so when it broke out, it came back to retest it. So it will be showing that, okay, price is actually trying to sell. Okay, so it sold for a shorter range before actually retracing back upward. That's not for the video. This is about divergence. I'm sorry for diverging to another price action technique, but so that you guys should have idea of what I'm saying. So you can see price opposites and indicator moving in opposite direction. Okay, no matter what you put on the chart, although I'm more in using RSI than MACD, so anyhow you like or prefer it, I guess people actually understand RSI than MACD. Okay, so anyhow you prefer it, is if it's suitable for you, then that's nice. So let's check another market. So we are on to VIX 25 on the daily time frame. So we spotted this move in the market. Okay, you can see this little range in the market. Okay, so if you are to take this range, okay, price came here, it came and actually retested this range, proving that okay, it's likely to range for some time. And to enter this range, we now confirm it with our um divergence. So let's add the RSI, this daily time frame. Okay, so we can see that they're actually moving in opposite direction. Okay, opposite direction, both the highs and also the lows. Okay, so it's actually possible for market to also come here, retest this trend line for a sell again. But for the way I'm thinking, it might go two ways. Either because market is actually in a downtrend currently, so it's likely to come back here, then continue the sell from this range. Okay, so anyhow market, and it's also likely for market to break upward, retest, then move up. So anyhow market go, we just have to be patient. Then if you're in the group, I'll drop analysis on all of them, divergence anyway, so we can take or look at it together. Okay, so this is VIX 25 right now. I hope with the other example I've given, I hope you can now understand what I'm trying to say here. Okay, so when market or price is moving downward in the lows, price is moving upward in the low, so making you confirm that okay, each touch in the trend line, it might be valid for us. Okay, but if both price and indicator are moving the same direction, both highs and lows, we leave the market, or we confirm it with another type of price action strategy. Okay, it's not all the time we use divergence to confirm any entry or trade we take, but as per this video, we're using divergence to confirm it. So let's take one more example. So this example will be different because we're not using trend line or um support resistance or any formation here. I just want to give this as an example. So let's say we spot something here. So for example, this and this, you can see that price and also the indicator are moving in opposite direction on the eyes of the market. Okay, so this is trying to signify to us that okay, price is likely to sell. Okay, so what I'm just trying to clarify in this example is that we can also use divergence. Okay, what we can also use to confirm divergence is candlestick pattern formation. Okay, so let me switch. Let's say in this side an engulfing was formed. Let's say an engulfing was formed here, or either hangman or any or doji or any of the candlestick formation or pattern formed. Okay, it might actually signify to us that okay, this divergence is confirmed, then we can now take our long sell. And this daily time frame, if we can open trade for a day or have targets as price is moving downward, you adjust your stop loss. As it's moving downward, you adjust your stop loss. Okay, so if your stop loss gets hit here, you close a massive profit because this is the daily time frame. Okay, I also take daily time frame to know the picture of the market or to know if to take or enter long-term trade, or to scalp in 1 hour or 30 minutes time frame. Okay, so what we can also use to confirm divergence is candlestick pattern formation. So let's say price moved like this, okay, and around this side an engulfing was formed. Okay, it will confirm that, okay, and price and indicator is moving opposite. Okay, this will try to tell us that this formed, and we see candlestick formation formed. Quickly enter your trade. Okay, if it's a reversal candlestick, quickly enter, because it's 90% likely to hit your TP, okay, or move in profit. So the more price goes down, the more you adjust your stop loss, or even want it to run for days, you leave it for days. Okay, so I hope you guys understood what I've taught in this video. Okay, if you have any other question, you can ask either through the link in the description, or you can ask in the YouTube search bar, comment bar, so that I can see it and reply quickly. Okay, so thank you. I hope you guys understood what I'll explain in this video. Thank you.